Jesse Livermore made $1.8 billion off a single trade.
You ever wonder what it would feel like to make $1 million off of one trade? As a young trader, I dreamed of it, and the truth led me here. Since you want a taste of my trading secrets, I'll show you my trading journey and my dog pain.
It's the dawn of a new world order. As America exits the Civil War, it's on track to becoming an industrial giant and birthing America's most powerful day trader. But a war between two American tycoons is shaking the very foundation of the country and potentially collapsing the entire economy. Leading the attack is Edward Henry Harriman. Harriman is an infamous stock market speculator. His skills managed to get him control of the Union Pacific Railroad. As railroads lead America's economic boom, Harriman plans to monopolize the entire industry. To realize his ambition, Harriman teams up with the cunning banker Jacob Schiff. Schiff leads investment bank Kuhn, Loeb & Company. Schiff was known for bringing in large European bank loans to fund America's industry. Together, they got capital backing from the Rockefellers, Vanderbilts, and the Golds. Their plan of attack was simple: use their immense capital to secure control over the West Coast territory, from Omaha to California. But they faced an immediate crisis as one of America's most powerful industrial tycoons made his own advance on a railway monopoly.
That railroad trade was my first big trade in New York. During those times, New York was wild, and I was young. I had yet to learn just how ruthless the markets could be. When I lost everything, I often learned the greatest lesson.
Miserable, the boy was desperately searching for a home. He loved school, but his father forced him to drop out to help out with the farm. Destroyed, he decided to run away from home. With the help of his mother's $5, she arranges a place for him to stay in the city to find a job. But the boy decides to follow his own desire, taking a cab to a place that fascinated him the most: stockbrokers Payne, Weber, and Co. Watching day traders on the floor captivated him. The loud cheers after life-changing profits. The wall of noise as each trader battles for survival. The rush feels amazing. Charming the owners into a temporary job, he works as a chalk boy for $5 a week. His job was to write down prices from the ticker tape onto a quotation board, a big board for traders to view every 15 minutes. While nobody's going to teach trading to a simple chalk boy, his own curiosity came up with an idea. He starts memorizing all the stock numbers at night, trying to find the patterns and theorizing price action. The next morning, he checks the price action and compares it to his theories, doing it all over the next day. After months of repetition, his confidence grows as he wants to try his first bet. While he can't trade at the brokerage, he discovers a shady new place to make his own bet. Industrial tycoon J.P. Morgan also had his eyes set on a railway monopoly. He wants it for his gigantic United States Steel Corporation to transport cheaper and international. As America's greatest financier, his will breaks opposition. J.P. Morgan lends his financial weight to empire builder James J. Hill, the railroad top dog, expanding his railroad empire, the Great Northern Railroad. With Morgan's financial backing, they buy out competitor Northern Pacific, granting them control over their northern front. As the industry blasts forward, they battle to secure the centerpiece. Chicago Burlington Railroad Company was run by Charles Eliot Perkins. While both parties attempt to talk Perkins into a merger, he refuses. He isn't interested unless they offer a crazy $200 per share. But unknown to everyone, Morgan and Hill had made a cunning move. Through third parties, they started buying up Burlington stock on the public market. Their position is so large, internal board members' pressure is building up, forcing Perkins' hand to side with Northern Pacific. As news spread of their partnership talks, Harriman is furious. Refusing defeat, Harriman decides to strike them at their heart. Harriman begins buying shares of Northern Pacific. As the Titan wage war, Wall Street is in a frenzy. Everybody wants to buy the industrial boom. The entire Wall Street hopes to buy stocks of the railroad winner. Even retail investors are frantic. One man is waiting on the sidelines. Ahead of the frenzy, he secured a sizable investment in Northern Pacific. The notorious speculator, Jesse Livermore. The shady bucket shops is where he learned his first painful lesson. Bucket shops were gambling pubs. It's where you bet on stocks going up or down without actually owning the stock. Filled with common folks, it's the perfect spot for him to test his theories. He makes his first winning trade of $3 by testing patterns he had memorized from his chalkboard work. It felt unbelievable, but the high was quick to pass as the boy fought to balance his time between chalkboard work and betting in bucket shops. Working long days and betting on price action memorization in the evening, the fatigue was starting to catch up with him. Through his struggle, the boy accumulated $10,000, but word had gone back to Payne and Weber, and they aren't happy. Pulling him in their office, they tell him to either quit betting or lose his job. Jesse decides to bet on himself and leaves. He continues to bet in bucket shops and start winning so much that all his bucket shops start banning him. Even after trying a disguise, word gets around too fast and he's no longer welcome. At the age of 21, trading in the last Boston bucket shop, with a bankroll of $10,000, Jesse Livermore decides it's time for him to test his theories against the real market in New York. At the dawn of a new industrial boom, Jesse moves to the King City. Feeling confident and high on life, Jesse gets involved with a lady and marries her only after a few weeks. It's America's second industrial revolution and a raging bull market. Jesse wastes no time and starts trading. His trading technique still relies on memorization, going long and focusing on price movements and patterns on the ticker. He kept it familiar, betting on his own trends and price action. His experience quickly paid off. 4 days after reaching New York, he's already in the green. But in the next few months, he would face the greatest challenge yet. Jesse Livermore risks everything on a railroad battle that could crush the entire economy. Monday morning, mortgage brokers start buying up any Northern Pacific share they find, and everybody wants in. The price rises from $110 a share to $130. Tuesday, the price runs up to $150 as the frenzy for the Northern Pacific shares continue. The action on the Wall Street floors is so wild, fights break out. Unprecedented chaos, the massive traders move towards shorting, doubting the stock's rapid rise. The pressure tightens as the price shoots up from $143 to $200. All hell broke loose as the share price hits the moon at $1,000 per share. As most of the market have bet on its drop, traders fear the worst. News spread that Northern Pacific shorts are far exceeding buys. Nobody can cover their short, leaving most of Wall Street insolvent. That morning, Jesse Livermore sees his golden opportunity, and that's where he moved. Having sold his stocks near the peak price, his $10,000 now stood at $50,000. He issued his brokers to get him a huge short position on Santa Fe and JP Morgan's U.S. Steel Company. He takes the 4-to-1 leverage short with all his capital on Santa Fe and JP Morgan's U.S. Steel Company. With shorters insolvent, Livermore is confident the stocks are going down. While the risk is great, having been calm through the storm, it feels like a well-timed move. With no money left on Wall Street, he knows the market has nowhere to go but down. Despite the state of the market, the two biggest holders, Morgan and Harriman, refused to sell. As Morgan told reporters, he owed the public nothing. Other stocks plummeted as interest rates on short-term call loans go up 60%. As Wall Street is in a state of emergency, with stock dropping at huge rates, Livermore is about to make the largest profit in the history of Wall Street. Unfortunately, young Jesse Livermore makes a critical error. Trading on the New York floor isn't the same as the bucket shops. In the bucket shops, he places the orders himself. Here, he telephoned orders in with his brokers. The broker then still has to fill the order. Despite having good brokers, due to the insane volume on the markets that day, the delay was great. The orders didn't fill until 2 hours later. By then, the stock had already dropped huge. Realizing the dangerous state of the market, powerful players fear a collapse. Later that day, Morgan and Harriman brokers scream over the floors. We will not force payment of shorts on the Northern Pacific. The fear is over, and Northern Pacific drops down to $320 per share. Even though he's right on tape, the 20-year-old Jesse Livermore is broke at $500 in debt. All because of the mistiming of his orders.
All alone in New York, with easy money in my pockets, and the belief in my heart that I was beginning to understand the new machine. But I was still sticking to the tape. That is, I was still ignoring general principles. And as long as I did that, I could not spot the exact trouble with my game.
Broken and frustrated, Livermore isn't mad at the markets. He's mad at himself. Ignoring general principles had cost him. He isn't facing the ticker, he's facing a market. He failed to factor in the broker's timing as well as the high commission rates. In an attempt to build up his capital again, Livermore asks his wife to help. He asks her to sell the expensive jewelry he had bought her. She refuses. They divorce a while after. Broken, alone in King City, he is desperate to find a quick way to pay off his debts. In needed quick cash, Livermore turns to his old heists. Being banged from bucket shops, Livermore decides to turn his bets to other people. While it worked, the bucket shops didn't take long to recognize who was really behind it. Some ban him while others takes matters into their own hands, gathering troops to swindle him. Livermore responds in kind. He and his rookies start running sting operations on thinly trading stocks on the New York Stock Exchange. Kicked out and hated by bucket shops, Livermore returns to New York victorious with $2,000 to trade. He pays off the remaining $500 debt as he sets out to trade for his redemption. He battles with the dark demons of his past. As time passes, Livermore fights for redemption. The painful bankruptcy lingers in his mind as he trades. Haunted by broker slipperage, Jesse faces the markets. Even though his trades are green, he cuts his winners short. Even though he knows his trades have more upside, he's emotionally damaged and fears the risk. Despite the struggle, his price reading is so sharp that he manages to grow his account. After a few years of trading, Livermore is back and more confident than ever. As he moves up the social ranking in New York, his hunger for money grows. The quicker the money, the more powerful the market makers involved. As he grows, Livermore learns the dark truths behind the markets, sparking the most unbelievable trade of his entire life.
Where each day ends with the promise of an even brighter tomorrow. Enjoy our boats, and the water, and the golden beaches. The Palm Beach Country Club, the real winners.
Invited on a vacation to Palm Beach Club, Livermore joins the eccentric speculator Thomas W. Lawson. Without mentioning too many details, Thomas tips Jesse to go short on Union Pacific Railroad. Was it being set up, or is it insider trading? After all those years, Livermore is now rolling with a whole new circle, New York's finest. This isn't just any club, it's an elite beach club for the most powerful men in America. In a time of American titans such as J.P. Morgan and Rockefeller, architects of generational wealth. Even though Lawson gives off an ominous vibe, filled with his desire to be part of the elite club and make profits that span multiple lifetimes, he believes Lawson is telling the truth. He informs his brokers to go short the same day. On April 18th, an earthquake strikes near San Francisco, the largest city on the west coast. With a huge magnitude of 7.8, its destruction strikes the city. Fires break out due to collapsing glass lines, falling power lines. Thousands die, and many more hurt. Following the damage, Union Pacific Railroad Company takes a huge hit. Truly eccentric, one day after placing his trades, Livermore walks away with a profit, $250,000. But America's crisis is far from over. After the earthquake, the American markets entered an unstable period. As liquidity flows from New York to San Francisco, the U.S. Treasury steps in. They start buying government bonds on a huge scale and drop requirements for banks to hold reserves against government deposits. The result, a flood of money supply. Despite entering an economic recession, with the money supply, stock speculation is high. Anticipating the economic return, two men attempt to capitalize. Copper mogul F. Augustus Hines and Wall Street banker Charles W. Moore scheme to corner the market. Their plan is simple: corner the market through Hines Family United States Copper Company. The Hines family already controlled a lot of the shares, so all they needed is to convince speculators their stock is overvalued and going down, talking a huge number of traders into shorting their own stock. Then make the price go up and scheme together a short squeeze. With a lot of their stocks trading at speculative bucket shops, they're confident in their plan. On Monday, they begin purchasing shares of United Copper. The price shoots up from $39 to $52 a share. The next day, they issue a call for short sellers to return the borrowed stock. They continue to push the price up to $60, but the short sellers aren't fazed, and they find plenty of United Copper shares from others than the Hines. Hines have misread the market. As word spread of their scheme, the share price of United Copper begins to collapse. The stock closes at $30 a share on Tuesday and falls to $10 by Wednesday. Otto Hines is bankrupt. Both Hines and Morse have controlling positions in the bank. They used a lot of leverage in their attempt to corner the market. The result, the brokerage and state saving bank of Montana go insolvent. Amongst the panic, one man had kept his ear to the street. With his connections to the bucket shops, Livermore sees their plan coming from miles away. Watching the squeeze fail, he knows the drawback is huge. Livermore had his eyes on the squeeze, but had also learned to factor in the larger market trend, anticipating both the shorter time frame events and the longer time frame market cycle. For months, he saw the FOMO and speculation run up. So when the Northern Pacific and Great Northern announced their payment in installment, Livermore read it as the new boost in money had run out. Liquidity is back to its bottom, and the economy heading to a recession. Livermore smells profit. He opens a short position on the entire market. As the headline spreads, bank runs start on all the banks of Hines Associate. The bank runs continue to spread and affects banks on a regional scale. More banks collapse. The hit on the financial system is so severe that the stock market dropped at a rapid speed, heading towards 50%. This could lead to the greatest economic downturn the US had ever experienced in its history. Understanding the gravity of this situation, the most powerful financier in America steps up. JP Morgan organizes a group of banking executives to come up with a scheme to save the markets. JP Morgan gets Rockefeller, the US Treasury, on board to deposit millions into New York's banks. The US Treasury pledges $35 million in deposits into New York City banks, most of which are Morgan's banks. Meanwhile, the markets continue to drown, and Livermore is making incredible profits. His position had gotten so large it's moving the entire market. It's so powerful that one day he receives an anonymous letter. The letter said, "Please stop shorting the market, as the entire system can take no more." Some say the letter came from JP Morgan himself. Shortly after, Livermore decides to close his positions, and with the new inflow of liquidity into the markets, a lot of panic emerges. JP Morgan, a one-man central bank, had saved America's economy. The trade printed Jesse Livermore a profit of $1 million, gaining him the reputation as America's most powerful trader, known as the Boy Plunger.
This time, I was cold-bloodedly right. Not because of a hunch or from skillful reading of the tape, but as the result of my analysis of conditions affecting the stock market in general. I'm not guessing. I'm anticipating the inevitable.
His high life did not stop there. After the trade, everybody wanted a piece of him. After his victory, Livermore buys himself a yacht, a rail car to emulate JP Morgan's Corsair. As Wall Street legend, Livermore changed his fate. From poverty to elite. Along with the fame came a huge pride. Surrounded by Wall Street's finest, their insider information, Livermore enters his prime. His trading is unstoppable. Livermore is in a different class from the ones he calls Wall Street suckers. Addicted to the thrill of trading, Livermore still trades daily. Impatient and stagnant in his daily trades, he plans a huge move. Corner an entire market. For the last years, Livermore had been trading commodities. Familiar with his price action, he's short cotton and long weed. His positions were in profit until one day he receives a dire warning. The Cotton King, only known by the pseudonym Percy Thomas, he misread the market and goes bankrupt. Broken and defeated, the Cotton King learns of Livermore's plans. After tracking him down, he pitches Livermore his expertise, even claiming to have people inside the farms for insider info on the crop yields. Not impressed, Livermore turns him down, as he always preferred trading alone. Despite this, Thomas's knowledge and charm gradually sways Livermore, sharing alarming information, worrying yields, and much more. Livermore's armor is chipped away bit by bit. Before meeting Thomas, Livermore was short on cotton, but after a month of listening, Livermore goes long. With his judgment clouded, he continues to average down on his long position. As cotton continues to fall, he even sells his profitable wheat position to meet margin requirements in cotton. He buys more cotton as prices continue to decline, breaking his own trading rule. It doesn't take long for Livermore to realize what has happened. He sells out with $300,000 remaining, 10% of what he had only a few months ago. Livermore sells his apartment and yacht in an attempt to recoup his losses. In one bad trade, was left once again, alone and broke. But to make matters worse, this time he had a monstrous ego pressuring him to trade his way back as fast as possible.
Gradually, as I begin to accept his facts and figures, I start to fear that I had been basing my previous position on misinformation. I couldn't ignore that feeling and not take action. It cost me millions to learn that another dangerous enemy to a trader is his susceptibility to the influence of a magnetic personality when presented convincingly by a brilliant mind.
Spiraling out of control and desperate to regain his wealth, his emotions run wild. Using drinking and affairs as a coping mechanism, his trading skills are hit. His desperate trading is forcing him into a death spiral. Each trade, he feels the pressure of getting closer to blowing his account. Trading to make his losers back, high leverage bets, and averaging down. He needs to make a big win quick, or else. Livermore is broke again. His reputation as Boy Plunger weighing on him. He hits a cold streak. Everything he touches turns into a loser. Livermore trades himself into debt. His desperation spirals into depression as Livermore tries to retrace his steps once again. He even goes to Chicago to try his luck at bucket shops.
I've been in the speculative game ever since I was 14. It's all I've ever done. And the conclusion that I've reached after 30 years of constant trading, both on the shoestring and with millions of dollars behind me, is this. A man may beat a stock or a group at a certain time, but no man living can beat the stock market.
One day, he receives an invitation to return to New York. Livermore meets Dan Williamson, the owner of a stock brokerage. In awe of his boy plunger reputation, Williamson offers him a $25,000 stake and a brokerage account. Desperate and seeing it as a quick way out, he agrees. Shortly after, he trades his way up to $112,000. Despite his struggle, Livermore fails to realize Williamson's plan. He wants Livermore for his reputation. See, Williamson is using it to hide the brokerage's other trades, and even trades on Livermore's behalf, accumulating huge losses. Angry, Livermore and Williamson get into a fight. Livermore leaves the brokerage soon after. Betrayed, alone, broke, and seeing no light at the end of the tunnel, Livermore decides that the only option left is to file for bankruptcy. Looking back on his losses, it had gone to his head. Jesse Livermore realized that he had become the super sucker, breaking his own trading rules, trusting others' views, overconfidence, and impatience. The humiliation destroyed his calm composure and led to even more blunders, forcing trades and averaging down. His emotional state preventing him from doing better. A true super sucker, thinking he was above the market.
A man must know himself thoroughly if he's going to make a good job out of trading in the speculative markets. I sometimes think that no price is too high for a speculator to pay to learn that which will keep him from getting the swelled head. There's only one side of the market, and it's not the bull side or the bear side, but the right side.
While the reflection and filing for bankruptcy felt relieving, there was something missing. With no other option, Livermore returns to Williamson. He begs for another tiny stake of 500 shares. Feeling the pressure of his last chance, Livermore decides to make it one final bet. Clear price action in the line with a larger market trend. For the next 6 months, the markets stay flat. Livermore immerses himself in reading the tape, spending countless hours observing price action and memorizing market movements. He reads newspapers to form his own educated view on the general market. And that's when the beginning stages of World War I unfold. Allied and German troops clashing in a drawn-out trench war. While America vowed to stay out of it, things change in May 1915. As Germany sinks the British Lufthansa, it kills 1,200 civilians and 128 Americans without warning. This incident sparks mass debates on whether America should enter the war. Livermore sees this trade. Seeing no clear end to the war and with potential American interference looming, he anticipates a bullish cycle for American steel companies. As one of his target stocks drop, he places his final bet, going long on Bethlehem Steel, buying on the high margin at $98. As prices rise, he buys again at $115. The following day, he sells the stake at $140, securing a large profit. The next years, Livermore makes his comeback of a lifetime. Some suggest he engages in massive market manipulation in the con market, while others believe he strictly rides the bull. While the record isn't clear, one thing is certain: Livermore learns the most valuable lesson of his life as a market speculator.
Nobody can catch all the fluctuations. In a bull market, your game is to buy and hold until you believe that the bull market is near its end. To do this, you must study general conditions and not tips or special favors affecting individual stocks. One of the most helpful things that anybody can learn is to give up trying to catch the last eighth or the first. These two are the most expensive eighths in the world.
Enjoying newfound success, Livermore starts trading a lot less. It had a huge positive impact on his performance. After a long public divorce from his wife, Nettie Jordan, Livermore finds a new love, Dorothy. Living a high society life, and after having 2 children, they buy a house in Great Neck. Here, Livermore begins his conversations with Edwin Lefree, the writer of Reminiscences of a Stock Operator. He moves into custom design offices in the Heckscher building on 5th Avenue, enjoying the distance from the hectic Wall Street. The grass couldn't seem greener until 1929 strikes. Consumerism, After World War I, the Western economies explode, with America leading the charge. Decadence and excess are the name of the game. The stock market flourishes as prices seem to rise without limit. Banks get more lenient on loans and allow everyday consumers way more debt. Everyday folks start playing their hands in the market. Stock trading becomes so popular that telegram services are set up to help people trade on cruises. In 1929, Livermore feels the bubble has reached its limit. With experience trading market tops, the signs are clear. True to his boy plunger name, Livermore makes a massive gamble. He shorts the entire market, as he did in 1907. He takes a huge short position against the market and sustains months of heavy losses. At one point, he's down by more than $9 million. Traumatized by his previous bankruptcy, Livermore starts doubting his call. For months, he eats red numbers. But he knew this time it was his own call. Ignoring fears, Livermore holds on. By September 1929, the bubble starts to crack. Sustained losses hit Wall Street. The volatility exploded in October, with several trading days of huge drops, one of the greatest stock market collapses in American history. In the aftermath, as the world picks up the pieces of a destroyed economy, Livermore emerges with a fortune of over $100 million. If it ends here, Livermore would have spent the rest of his life living like a king. But it doesn't. He's a gambler and a speculator at heart, which ultimately cost him everything. While 1929 was his peak performance, it also marked the end of an era. All the easy money retail traders were left scarred. The excitement of the stock market was gone. The huge inflow of liquidity was disappearing. The reality sets in, America heads towards the Great Depression, and the momentum for the last 20 years is gone, along with Livermore's passion and opportunities. The markets enter a new, ever-changing cycle. In 1932, living lavishly, his wife develops a bad habit of drinking, and Livermore had continuous affairs. His marriage comes crashing down to the tune of a $10 million divorce settlement, and even his mistress sues him. 1934 marks the start of the United States Security and Exchange Commission, illegalizing many of the trading practices that Livermore relies on. His lifestyle and trading are a train wreck. Some say he lost his fortune going long on sugar futures as the FDR put a ceiling on the sugar price. Others say he lost his fortune by going long after the crash and not getting out in time, thinking the 1929 dip would show a similar pattern he experienced in previous cycles. Yet one thing is clear, Livermore is no longer flexible enough to go along with the ever-changing cycle. He failed to speculate the creation of the SEC and the impact of the FDR on the boom and bust cycle. By the end of the same year, his huge fortune is gone, and he declares bankruptcy for the final time. Livermore becomes a symbol of all that is wrong on Wall Street, and as his wealth disappears, so does his remaining prestige. Livermore marries a socialite and American singer, Harriet Metz. 4 times widowed, she had enough money to support their lifestyle. As he heads towards another bankruptcy, he and his wife sail to Europe, hoping to relieve his mind of some of his troubles and to make another comeback. But Livermore never quite does. The dark demon of his depression hangs over his head, and with his wife's finances, he had lost his drive. He felt like a failure. And in 1940, at the Sherry Netherland Hotel in New York, Livermore ends things himself.